somebody head right in the head on to her. The insurance company we had her insurance with not only fixed her daughter's car and paid for the medical. You know, it's just like we just don't know. You got liability only coverage, and it says, well, what does that mean? Well, that means that we're going to fix the other guy's car. But if somebody hits your car on the street, it's going to fix your car too, as long as you weren't driving it. Liability only. Okay. So I hope to get a chance to come back and talk with you all again. I hope you all come back. Life insurance is a very interesting thing right now, and
we can contact you at any time, right?
Oh man, you got my card on there, but you know what I'm going to do? I'm going to pass out something to you all when I finish, and it's a little critique. It just says, what would you love to have heard me talk about other than what I talked about? Because we can talk about insurance all day long.
Thank you. Thank you, Mr. Powell. Next, we have number two, loan officer. Many of us know that when purchasing a piece of property, you need someone to find the best interest rates and terms. This is a crucial part of the process because in the end, it can make or break you. Like most Americans, people only saw the little picture, not the big picture. Big picture being, I got a big house and I'm keeping up with the Joneses. They signed deals that were marked for death, which was a loan that ballooned after 5 years. Most people hear what they want to hear, and the rest they tune out. The loan officer told them they should take this balloon payment, this balloon mortgage, because they can refinance it in 2 years. You don't want a loan officer that's chasing a commission, but a loan officer that has your interests at heart. I give you the person with direction when all else fails. Ms. Linda from MB Financial.
Again, my name is Linda Campbell. I'm with MB Financial Bank, and my area actually deals with residential mortgages, and that's for primary residences, second homes, and investment properties of 1 to 4 units. And the area that I actually deal with is really at the application process. One of the things that I wanted to let you know that right now, through the end of this month, we are doing pre-approvals for mortgages at no cost. So you just come on in and fill out the pre-approval application, and we can let you know how much you're pre-approved for. And a lot of realtors these days are not even allowing you, or not even taking you out to show you properties until you have a pre-approval certificate. So we can get that for you. Right now, because of the interest rates and property values being low, it's a really good time to be looking at buying properties. Rates are historically low. Also a great time to refinance, especially if your purchase or your last refinance was prior to 2009. You likely have an interest rate that's at 6.5 or at least 6.5 to 7%. The bank will finance up to 80% of the value of your home. Just to give you some, just a general idea, if you had a $100,000 30-year mortgage at 7%, your principal and interest payment is about $665. That same amount at the current 30-year best rate at 4.5% would have a principal and interest payment of about $507 per month, resulting in a savings of about $1,896 per year. Over 20 years, that savings is over $37,000. For 25 years, that savings is more than $47,000, and over 30 years, the savings is more than $58,000. Now, one of the things that I wanted to make you aware of too are there's a couple of programs out there, the Making Home Affordable programs, that are designed to help you to avoid the foreclosure process. The Home Affordable Modification Program, called HAMP, has to be done with the current lender. That is for individuals that are experiencing financial hardship. Again, you have to do that with the current lender. The plan is based on the belief that struggling borrowers will stay in their homes, even if the value of the home declines, as long as they can make their monthly payment. Foreclosures take place because borrowers can no longer make the payments they agreed to pay. The Obama plan allows for new mortgage agreements and lower monthly payments. It applies only to owner-occupied primary residences with outstanding mortgage principal balances up to $729,750. Owner occupancy will be verified through documentation such as a credit report. Participating borrowers will have to sign an affidavit of financial hardship and verify their income through documentation. Only loans made on or before January 1, 2009 are eligible for this program. Modified payments will remain in place for 5 years. A borrower can enter the loan modification program once. In addition, each borrower will have a 90-day trial period during which the borrower must remain current with payments. After the 90-day trial period is successfully passed, the borrower is accepted for the loan modification program. I do have a printout up here with more details on that as well. Moving on to the home affordable refinance program, that can be done either with a current lender or with another lender. That particular program is designed for a lot of the, as we know, property values have decreased. So if you've had a mortgage several years back, it's quite possible that you owe more than what your house is actually worth right now. So you can apply for a home affordable refinance program. If you do it through your current lender, that current lender has greater latitude as far as being able to refinance up to a higher loan to value, maybe up to, say, 125% of the value of the home. Other lenders may be limited to a lesser loan to value, maybe like 105. The current lender does not have to, you don't have to go through full underwriting, whereas if you go with a different lender, that lender will have to fully underwrite you, which means we're going to need your income verifications, tax returns, bank statements, and that kind of thing. And also the HARP program, your house does have to be, the mortgage has to be owned by either Freddie Mac or Fannie Mae. And currently, MB Financial is refinancing into the HARP program for loans that are owned by Freddie Mac.
Thank you, Linda. Give it up for Linda, everybody. Sure, go ahead.
Yeah, on the HAMP loan or the HAMP modification, if you was approved and they forgiven you on a certain amount, is that amount that was forgiven, is that taxable? Does that go toward an income of being taxed? The money that you was, say if you was forgiven for, whatever dollar amount.
I don't really have the answer to that question, but I'd be glad to take your name and phone number and get that answer for you.
Oh.
Okay.
Any other questions?
Any other questions?
You said that you can, it's a program that you paying more for your house than it's worth. That's how I feel like my mortgage is upside down. And you said it's a program for that?
Yes, it's called the Home Affordable Refinance Program, where you can, like I said, if you go to your current lender, they may have greater latitude as far as how much they can mortgage for the value of your home. Sometimes they can go up to, say, maybe 125% of the value of your home and refinance for that amount. Whereas, like a lender that currently doesn't have the mortgage, they may be limited to only be able to go to maybe 105 of the value of the home.
So you're saying that they refinance the value of the home and not the part that's owed?
Oh, no. It's refinancing what you actually still owe on the home.
But you still owe a home.
Mm-hmm.
Okay. Say that the home is owed $130,000, but its home value is $65,000. So they are refinancing. So the mortgage is still upside down.
But it's a way, again, it's a way of helping you to stay in your property so that it doesn't result in foreclosure.
Any other questions?
And again, at a much lower interest rate than what you probably were paying when you originally took out the mortgage.
Any other questions? Next, we have Mr. John with Land Home Financial. He's also a loan officer.
I'll stand up, I'm kind of short. Everything Linda said pretty much applies to what I do, but I work for a national company out of California called Land Home Financial. One of the main differences between what she does and what I do is we also do HARP loans, but we have no limits whatsoever, so it doesn't matter how far upside down you are. So that's how I get a lot of my business, is what I've been doing for the past 2 years. I was invited to speak here yesterday. I don't have prepared remarks. But basically, I'm a mortgage banker. I loan money to purchase and refinance 1 to 4 unit residential real estate. So, does anybody want to know anything about their mortgage or about mortgage lending in general?
Yeah, what's the best kind of interest rate
Well, the interest rate is a function of your entire credit profile, your credit score, and the type of loan you're going for. So when people quote you rates over the phone or anything, they are quoting you a generic rate, which is the best possible rate based on the best possible parameters of what you might qualify for. Nobody really knows your rate until they take all your information, put you through their underwriting system, and order your credit. It's largely a function of your credit scores. But given that, as Linda said, the rate's generally in the 30-year range, around 4.5 today. So.
The loans you remodify, do they have to be with Freddie and
It's not a modification per se. What we do is we're refinancing you under the HARP program. It has to be owned by Freddie Mac or Fannie Mae prior to May of 2009. Okay? And by the way, I can do both Freddie Mac and Fannie Mae. So I don't have prepared remarks, as I say, but I brought my generic business cards, which I'll pass out if you want one, with my contact information. I used to be called the mortgage man. That's what it says on here. I wrote like 450 articles for the Shopper magazine over there in South Holland while I worked in this business, which I've been in since 1999. I also teach at Thornwood, by the way. For whatever that's worth, I went to Thornbridge though. And I lived in Dolton on Grant Street for 15 years. So.
Where are you teaching at Thornwood?
I'm a sub, so I teach whatever they tell me to. I actually teach very little. Just trying to keep peace. So, anyway, it's a complex business. One thing I will say is, prior to 2008, you really could have gotten hosed by a loan officer, but the way things are anymore, that's really impossible to happen anymore. You're pretty much guaranteed the lowest rate on the day you lock, regardless, because we don't get paid anymore based on assigning rates. That's not what we do anymore. So you really can't get hurt. The main difference in dealing with one company to another is what products they offer and how their rates compare and compete with the general market. As I say, I'm a national lender, so our rates are about the best you can get. And as I say, our closing fees are standard, so there's really no way you can get hurt dealing with me is what I'm saying. I couldn't hurt you if I tried, okay? So and I've never operated that way. I worked at South Holland Bank for 28 years as a loan officer. I've been in this business for like 40 years. And I had gray hair when I started, by the way. So, so that hasn't changed.
I want to know.
Yes.
Okay. That's what I came for housing, of course, the financing.
Yes.
Like I said, my mortgage is upside down. I am very concerned about
Right.
that. Matter of fact, I'm ready to leave. Cause my house is old, mortgage is upside down. I am ready to leave and get me one of the newer houses for cheaper. I just don't know which house.
Right, well,
Told about.
okay, so the problem isn't really so much that you're upside down in your mortgage, but that you really want to leave the house.
No, I love my house. I hate that my mortgage is upside
Well-
down and I can get a newer house for cheap.
Well, if you like your house, you know, I would stay in it. I mean, look, your only other option really, you're not going to be able to buy another house because you're going to have to turn your house over to the lender if you can't sell it. And that's going to affect your credit score and probably negate you from qualifying for another mortgage loan anytime soon. So my opinion is, you know, my mortgage is very low. you know, basically speaking. So even though I'm upside down too, I'd rather live in a house than in an apartment. So, you know, I would just keep making your mortgage payment if you like living in the house eventually, before we die, hopefully. You know, it'll come back in value, but right now I don't think it really matters, you know. Unless, of course, you have to move or you want to move, you have to relocate or something like that. And then you can go to your lender and maybe do a, you know, a deed in lieu or something, which, you know, which would be quick in payments.
I'm considering a lot of, like I said, I love my house, I love my neighborhood, my area.
Right.
Things just going on right now that making me very unhappy with where I'm at. So I'm trying to decide, but my house, like I said, is upside down. I need a newer house and make less money, that makes less payment, money payments.
What is your rate?
I got 5%.
You know, you're sitting kind of pretty, actually. You know, if you at all like living where you live or like your house, I wouldn't do anything. I mean, you know, I just, yeah. By the way, my name is John Brunel. I left that out. Not that it matters. I should have started off like that, so you know who I am. Okay?
Let's give John a round of applause. Thank you, John. Tool number 3, the next tool to succeed. Defense attorney. Find yourself upside down and turned around in the process of doing a loan modification. Send things to your lender and no response. No, wait, scratch that. Send things to your lender and their response was, oh, Ms. Jones, we still didn't get your paperwork. We still waiting for your last 2 bank statements, your 2 pay stubs. We heard that all before. Tired of the ring around the rosy games? Then turn your sights to a firm that fights pollution and turns up a solution. Kiss and Associates, Mr. Phillips Kiss and Ty Moore. Thank you. Get them a round of applause. Thank you.
Thank you. One person asked a question, asked a question about foreclosure and what the process is. A foreclosure is just like any other lawsuit. It's changed a little bit. It used to be like every other lawsuit. It changed a little bit because now the government got involved in making sure that there were some protections built into homeowners that are in the process of being foreclosed. But basically, it's still just a lawsuit. And the process is you're behind in your mortgage. Most lenders won't start a foreclosure proceeding until you're at least 3 months or more behind. But it starts with the sheriff knocking on your door, handing you some papers, saying that the bank is foreclosing on you. And you have to take it seriously from day one. I spoke with someone earlier today who didn't, and their house was already at the point of having been sold at a sheriff's sale, and the sale was confirmed, and she asked me, is there anything you can do? It's over. And there's still some things you can do, but for the most part, it's over. That foreclosure process took, from the date she got served to the date where they're telling her she has to be out of her house, took about 8 months. When I represent someone, I have foreclosures that have been going on for 3 years. And the bank still hasn't taken the property back. And I wish there was an easy solution. This woman asked a question, she's upside down in her house. The reality is there is no solution for being upside down in your house. Because no matter what you do, you will either destroy your credit or have to wait until you right-side yourself, because there is no solution.
What do you mean right side?
Right side, you're going to have to stay in your house until your house until you can sell it for the amount of your mortgage. And at least walk away with clean credit. Otherwise, there is no solution. There really is no solution. Anyone that tries to sell you a solution is just doing that. They're trying to sell you something to get more money out of you. And you need to, you know, before you buy into something like that, you need to have some lawyer, not necessarily me, but some lawyer look at it before you start giving your money away. But the process is the sheriff comes knocking on your door, he hands you some papers, and at that point, you have one of two choices. You can do nothing, which a lot of people do, because they sit there and say, well, gee, I really owe the money, and they're suing me, and so I do nothing. You do nothing for 30 days, the bank comes in, they file for a default, that you have 30 days to file an answer to the lawsuit, you've done nothing. They want a default. Once they get that default judgment, things start spinning out of control. You're no longer in control of that situation. If you don't get into court and vacate that default judgment, you're on the road to losing your house and could be relatively quickly. A lawyer like myself is not going to be able to save your house. I'll tell you that right now. And anyone who says they will is not telling you the truth. There are things that we might be able to do. We might be able to do a workout, a deed in lieu of foreclosure, where you agree to give the bank back the house and you walk away, but you're out of the house. A deed in lieu of foreclosure will also reflect on your credit score. You may or may not be able to finance another house. It's been my experience that when people are faced with losing their house, usually their house is like, that's the most important thing that they own. I mean, their family is more important, but the most important thing that they own is their house. And usually, when they're at the point of losing their house, their credit is already shot. They've turned everywhere. They've borrowed money from Peter and Paul, and they have no choices. And now it's just a question of how long is it going to be before you're out on the street, because that's where you're going. And unfortunately, the situation is, and I hate to be the bearer of doom and gloom, but the reality is that when somebody's house has been foreclosed, it's even difficult to rent. Because the first thing a landlord, particularly a large commercial landlord, is going to do is pull a credit report and say, you just got foreclosed on your house, I'm going to rent to you. Or they're going to say, instead of 1 month security deposit, we want 3 or 4 months, because you're a bad credit risk. And the person losing their house, usually every penny that they had is in that house, and it's gone. And they don't have the money for the security deposit. It's a very ugly situation. The service, the real service that I provide is I make the banks live up to the contract. This is, and trust me, the banks are going to make you, and not to disparage the people up here because they're doing their jobs, but the banks are going to make you live up to your contract. They have no problem forcing you to follow the fine print of the law and take you into court and take your house away. What I do is I say, fine, you do that to them, I'm going to do it back to you. You live up to the law too. You live up to the letter of the law. And before any of my clients get put out of their house, I make sure that everything is done legally and they stay into the last possible day. Because the reality is, a lot of my clients, they got nowhere to go. And I don't want you to think, oh gee, this is a great guy. I'm not altruistic. I've got my own bills to pay. I have to charge for the service, and I do. But the reality is that when you're in that situation, you have to do what you have to do to survive. And with respect to that, like I said, it's been my experience. The banks are dealing with so many foreclosures. Everything is rolled. Nobody looks at the paperwork. You didn't look at, just like when you bought the house. Most of you never look at the paperwork. You probably had a lawyer sitting there, and there were a stack of papers that thick, that if you actually read, everybody would have been at the table for 3 days. But the reality is the closing took an hour. Lawyer said, sign here, you sign there. Never read anything, you didn't know what you signed, because you're paying this guy, whatever you're paying him, a couple $100 to show up for a real estate closing. And he's looking at his watch because he's got to get to the next appointment. Everything is rushed through. And it was happening, the same thing was happening in the courts until finally some lawyer, I wish it was me, but it wasn't, said, wait a second, let's look at some of this paperwork. And let's look at who signed what and who was supposed to sign something. And they find out that people sitting in the back room at the bank are making up signatures. And they're doing whatever. And they're taking people's houses away. And that's, if you're in that situation, that's what you got to fight against. You got to hold their feet to the fire and say, okay, you're going to take my house away. Maybe you have a legal right to do it, but then let's do it legally. Back to the process, you get served with the papers. You have a time period to answer. If you don't answer, they get a default judgment against you. If you file an answer, you're entitled to a trial. You're entitled to take this to a trial. You're entitled to have a judge make a ruling on it, and make a ruling that everything was done properly. And between the date that you get served with the papers to the date that, if the bank did everything right, if you put up a good defense, you could hold them off for 18 months. And the difference between that and not putting up a defense is being out of the house in 6 to 8 months. But like I say, it's been my experience that banks rush through everything, and so realistically, you could possibly stay in your house for years before they get you out. And when you've got nowhere else to go, that starts looking good. With respect to some of the other issues, and I know a lot of you are homeowners, and one of the other people, I think Ms. Washington was saying, well, gee, if a vacant property isn't being maintained, well, the city could come out and fine them, and someone's going to pay that fine. The reality is that's not the way the system works. In theory, it works like that. That's not how it really works. What happens is you, the homeowner, whose grass is a little bit too long, you're going to get fined. The house next door to you that's vacant, nobody's going to pay that fine. The city could come out and give them all kinds of fines. What happens is the banks will usually hold off trying to take title to the property as long as possible because they don't want to be paying the bills. So sometimes the banks cooperate in keeping the homeowner who's in default in the house. Because one, they don't want a vacant house. Because if it's vacant, people are going to start throwing rocks through the windows and breaking in and taking your plumbing out. So sometimes the banks cooperate with me. They say, we got your clients in the house. Eventually we want them out, but in the meantime, you can stay in because we don't want it vacant. And we don't want to own it. Because once the bank owns it, then yeah, they have to start paying, the fines the city puts in and says, you've got to pay X amount of dollars for